Tensions between the United States and Iran continue to make global headlines. But beyond politics and statements, there is a bigger question many people are asking. How do U.S.-Iran tensions affect the global economy? From oil prices to inflation, the impact goes far beyond the Middle East. Today, we're going to explain it clearly and calmly. Welcome to Global Pressure Point, the channel where we explain global events through the lens of economics, diplomacy, and real-world impact. If you're looking for clear and responsible global analysis, make sure you subscribe. So why do U.S.-Iran relations matter so much economically? It all comes down to location and influence. Iran is a major energy producer, sitting in a region that is critical for global oil and gas supplies. On the other hand, the United States plays a leading role in global trade and holds immense influence over the world's financial systems. Because these two nations are so central to the global economy, even the hint of conflict can create waves. When tensions rise between them, markets get nervous. This uncertainty alone, without any direct action, is powerful enough to influence prices on a global scale. It creates a ripple effect that starts with energy and quickly spreads to other parts of our economic lives. The simple fear of what might happen is often enough to trigger a real-world economic reaction, showing just how interconnected our world has become. One of the first and most noticeable areas affected is oil. The Middle East is the world's energy powerhouse, supplying a massive portion of the petroleum that fuels our cars, heats our homes, and powers our industries. A critical choke point for this supply is the Strait of Hormuz, a narrow waterway that Iran borders. Roughly 1/5 of the world's total oil consumption passes through this strait every single day. So, when tensions with the U.S. flare up, the global energy market holds its breath. Even the possibility of a disruption to this vital shipping lane can cause oil prices to fluctuate wildly. Traders and energy companies start to worry about potential supply shortages, and this fear drives prices up. This isn't just a problem for big corporations. It directly translates into higher energy costs for businesses and higher fuel prices at the pump for you and me. These rising costs affect everything from transportation and manufacturing to the price of your next plane ticket, demonstrating a direct link between geopolitics in the Middle East and daily living costs around the world. Now, let's connect this to something we all feel in our wallets: inflation and the cost of living. When energy prices go up, it's almost certain that inflation will follow. Think about it. Energy is a fundamental cost in producing and delivering nearly every product we buy. Higher fuel costs mean it's more expensive to transport food from farms to grocery stores. It costs more for factories to manufacture goods, from clothing to electronics. Businesses often pass these increased costs on to consumers, which means we end up paying more for everyday items. While this affects everyone, developing economies often feel the impact much more strongly. In these nations, energy and food costs typically make up a larger percentage of a family's household spending. So, a spike in oil prices can be the difference between making ends meet and falling into economic hardship. It is a clear example of how a distant political standoff can directly strain family budgets thousands of miles away. Financial markets also react very quickly to this kind of geopolitical uncertainty. Investors and traders hate unpredictability. It makes it difficult to assess risk and make sound decisions. During periods of heightened U.S.-Iran tension, you'll often see a flight to safety in global markets. This means investors become more cautious and start selling off riskier assets like stocks. Instead, they move their money into what are considered safe haven assets, like gold or government bonds from stable countries. This shift can cause stock markets around the world to fluctuate or decline, even in countries that are not directly involved in the conflict. This cautious atmosphere can also slow down global investment. Businesses might delay plans for expansion or new projects, waiting for the uncertainty to clear. Over time, this reluctance to invest can hamper economic growth, not just in one country, but across the entire global system. It's a domino effect, where political instability in one region creates financial anxiety everywhere else. Another critical area impacted is global trade and shipping. As we mentioned earlier, the region is home to some of the world's most important shipping routes, especially the Strait of Hormuz. When tensions rise, navigating these waters becomes a higher risk activity. In response, shipping insurance costs can skyrocket. Companies have to pay much more to insure their massive cargo ships and the valuable goods they carry against potential incidents. These increased costs are, once again, eventually passed down the supply chain. Furthermore, the risk of delays becomes much more likely. Ships might have to reroute, taking longer and more expensive paths to avoid potential conflict zones. Even small disruptions in these key maritime arteries can cause significant bottlenecks in global supply chains. A delay in a shipment of electronics parts, for example, can halt production at a factory on the other side of the world. This pressure on our interconnected supply chains shows just how fragile global trade can be in the face of geopolitical friction. So, let's bring it all together. The tensions between the US and Iran are far more than just a political headline. They represent a significant economic risk factor for the entire world. From the price of oil at the pump to the rate of inflation affecting your grocery bill, and from the stability of global financial markets to the efficiency of international trade, everything is connected. The stability of this key region has a direct and measurable impact on the global economy. This is precisely why world leaders and diplomats so often emphasize the need for de-escalation, dialogue, and restraint. They understand that in our deeply interconnected world, geopolitical stability is not just about politics. It's a prerequisite for global economic prosperity. Thanks for joining us on Global Pressure Point. We hope this gave you a clearer understanding of the economic side of this complex issue. What do you think? Are global economies becoming more sensitive to these kinds of geopolitical tensions? Let us know your thoughts in the comments below. And if you value calm, clear analysis, don't forget to subscribe for more.